All right. Hope everyone's having a nice start to their weekend. If you're celebrating the long weekend, uh, very nice. If not, I hope you still enjoy this video. Sorry for not putting one out last weekend. Again, I had some family in town, so I was a bit preoccupied. But nonetheless, I think I've got an important update, and we're going to go through a pretty streamlined agenda today as far as Bitcoin on the higher time frames, and then looking at my modified cycle count. We're going to be looking at some low time frame speculation. Then I'm going to be looking at how the Bitcoin miners denominated in Bitcoin look from a technical perspective, and that should wrap it up. Let's start off with Bitcoin on a daily chart, and we're simply observing this structure, this consolidation structure that dates back to the beginning of March and kind of where we are within the structure. And so far, it's been acting, for those of you that follow me on X, acting as you'd hope it would act after a violation of the low end of a range. And, what's the range? Very, very simply put, this area here, right? And then we had a violation, and you want to see a reclaim, kind of a test prior to breaking market structure. We had that change of character, and then we broke market structure with the first higher high put in here. And so at this moment, we have a new trend established. If we're simply looking at this from a basics of trend analysis, we have a new trend. We have a set of higher highs, higher lows. Our first higher high here, higher low, that was a change of character in this market trend. And so I'm very pleased with the way that the market's reacting at the moment. If we look at this in terms of a giant reaccumulation range, we have our buying climax that took us into this, what I'm calling this wave 3, 5 of 3, and then we had an automatic reaction. We had a secondary test. We had a consolidation and then an up thrust. And then we started bleeding down this creek area, right? This creek area, we had a spring. We had a test. That's the reclaim. And this can be looked at as an LPS. This could be looked at as a LPS, essentially just a check back to the last point of support. And the last point of support is all that price action. Another way to look at the last point of support, and the most important last point of support when we look at this entire range here is what? It's where the most volume has traded in this range. And I've got my volume profile up here to the right of the screen, and I've got my point of control, this POC line. That's where the most amount of volume has traded at the price. So at 67,000 as it stands right now is where most of this volume traded. And what did we see here? We saw a check back right to that volume level, that price by volume level, and it held. And so again, all the types of things that you want to see towards the end of a consolidation and the start of a new trend, a resumption of the high time frame trend, but start of a new trend on the lower time frame. And so what else do I want to see, right? If I'm pulling up, I've got a 20, 50, 100, and 200-day EMA. What do you always want to see in early stages of resumption of trend? Now, the 20 is the fastest moving average. Okay, it's going to move the fastest. It's most sensitive. It's the first it's going to turn down. It's the first it's going to cross under the one underneath it. In this case, it's the 50, and it's the one that my arrow is highlighting. Well, we had a cross here, okay, where it crossed under the 50. It's not necessarily bearish on high time frames, but it did kind of signal some weakness in the short term in this consolidation. What you want to see at the start of new trends is that 20 to be on top, and then everything else to follow, okay? That's bullish alignment of those EMAs. And we got our cross back here. We got our cross back here about a week ago, where that 20 crossed back above. And so now we've got bullish alignment. That doesn't mean that, you know, the price is just going to take off like I have illustrated. Again, just a reminder, I'm not a financial advisor. Don't take this as any kind of financial advice. Use this as just educational purposes. Do your own research. I have very strong convictions in the market, but again, price can go up, price can go down, price can go sideways. The market is going to tell us ultimately what will happen in time. All right, with that, back to the images. And so again, just all the things, I'm just adding these things for context and confluence to show us why I believe this new impulse has started. Last but not least was my favorite, right? I called out on the daily when we fell out of the cloud, the Ichimoku cloud, if we got back within 1, 2, 3, that I was calling this move a trap. We got back in within 3, actually fell out of the bottom. But we're able to get back across. And since then, we've been staying above it. We even retest the bottom of this, the top of the red cloud, but now we've got a turn back to green. And that's what we want to see. We don't want to see this red kind of get larger in the background. We want to see if there's any red on the daily time frame, it to be short-lived, not very thick, and then a flip back to green ASAP. Okay? And so that's what we're seeing. Very constructive. I'm going to get more into, you know, this count imagery that I have up here that you're all probably looking at. I'm going to get more into in other diagrams. Next, let's look at, this is a good one. This is a good one, folks. And this is a chart that's going back to 2016, okay? And essentially what I'm aiming to illustrate here is a set of signals that don't happen very often. And again, indicators are not forward looking. They're backwards looking. However, in the past, they have been indicative of things that follow when those conditions in the past have occurred, in terms of momentum, in terms of the rate of change in the momentum, as kind of measured by the stochastic RSI, the momentum itself as measured by the relative strength index. And so what I have here is, and let me better illustrate this. These red lines, okay, all these red lines here, in essence, are areas since 2016 where we've had a set of conditions that are pretty rare. And these are hidden bullish divergences between the RSI, the relative strength index, that's the power behind the move, and the stochastic RSI, okay? And so we had kind of a weak divergence there, very strong on the stochastic in September of 2020. Sorry about that. Okay, and then we had one back here in June of last year, going into that summer, just like time-based capitulation into August. And we've got one right now. Okay, we've got one right now where this last red line is. And we also have, and it might be hard to see, but if we really zoom in, right now we do have a bull cross that occurred on the stochastics, just like we saw in each of these other situations that I've illustrated here in the past. And that's 1, 2, 3, 4 prior. And in these 4 prior instances where the price makes a higher high, or excuse me, the price makes a higher low, but the stochastic and the RSI makes a lower low. Forward returns coming out of September 2016 to a local high was 2x. Coming out of March 2017 forward to the next local, which happened to be the macro top, was a 20x. Coming out of September 2020 forward, we had 6x. Coming out of September 2023 forward, we had a 2.7x. And so what's interesting is the cyclicality, and I just kind of noticed this as I'm talking, right? The cyclicality and the nature and cyclicality. So we had this show up in March 2017. We then had our next one show up in September. So that's the fall. This one again was the beginning of the fall, August, September. This one that we're kind of going through, May, April, May, right? So I don't know. That's just something I just noticed as I'm doing this. But anyway, 2.7x, 6x, 20x, 2x, that's 4 occurrences. Let me do the rough math in my head. I think that's around 7x conservative on the low end forward returns in each of those situations. And so that I'm paying attention to. Right now, folks, we also are working on something. We are working on something on the weekly time frame. And what is that? We are getting back above. Let me try to zoom in this RSI here. We're actually above 70 on the weekly. We're above 70 on the weekly. And so I highlight that, and now I'm going to go back. I'm going to see I'm going to demonstrate a difference here between what's going on now and these other occurrences, specifically as it relates to the relative strength. So back in September, when we had that 2x in front of us, we were down at 54, and it took us several months to get back above 70. Back in March 2017, a month later, within a month, we got back over 70. And that really moved, right? That was from 987 to the local top, 3,000. So that was a 3x move in March, April, May, June, in 3 months. Let's go back to September 2020. That took us, wow, that was only about a month. That was only about a month back to get back to get back over 70. And then back in September of 2023, that was about 2 months. And then here we're looking at May, the 6th of May, the week of the 6th of May. And so far, 2-3 weeks, and we're over 70. So the key here, and why I say 70, is when we get over this 70 is when the parabolic type of gains in Bitcoin occur, okay? And they happen fast, and they can happen in a matter of weeks. So when I put some of these targets up with my counts, I'm using a bunch of different inputs into my formula, right? And I'm using a bunch of inputs into my formula. If we were all the way down, let's just say we were all the way down below 50, a starting point on the weekly RSI, I would probably be looking at counts, right, that were a little bit more gradual in nature, okay? However, given where we are, I have to assume that type of price action, right? Versus, again, where we started down here, right? It took a little while. It took a little while for this to move up. Same thing down here, right? We were below, no, we're above 50. I'm sorry. We were above 50 there, but again, it was a bit of more of a gradual, right? 2x there. And and so on. And same even down here in September of 2020, you can see we were at 54. And this was, you know, slowly, then all of a sudden, boom. The character of what's going on now is different, folks. And so that's what, in my mind, in my opinion, that's why I'm not, you know, thinking, you know, slow, and then sudden. I'm thinking, you know, we're in a final impulse, macro impulse. They can get moving a lot quicker than most people are giving it credit for. That took a little bit longer than I had hoped to, but I think it was important, and it kind of frames a bit better what I'm trying to do, or what formulates a lot of the informs a lot of my other interpretations in terms of my counts. So let's go to the count. Let's go to the count. And all right. Here is the weekly count. Let me get rid of that. Let me get rid of that. Let me throw this up. And so I posted this on X yesterday just to kind of, let me get rid of the 30-week here. We are well above the 30-week. Trend is very clear, folks, from my standpoint. And so where I'm thinking we are in the context of this macro cycle, and again, for those of you that haven't been following me, this cycle, to me, we're closer to the end of it than we are the start of a new cycle. That's just my opinion. That's just my opinion. And when I look at when I look at this larger third impulse, we've got this 4 correction, and what I'm claiming is potentially this final 5th impulse. I want to note a couple things. I may have gone through this in a video a couple weeks ago, but I'm going to go through it again. I think it's important. When we look specifically at the character of these impulses, I want to highlight a couple things. This larger degree third impulse constituted of, you know, 1, 2, 3, 4, 5 wave moves. Okay. This third wave move was, in my opinion, an extended 1, 2, 3, 4, 5. Okay. Where you see this diagram up here that says third wave extension, you've got a 1, 2, and then this third within this 1, 2, 3, 4, 5 was extended. And where do I get this? Why do I think it was extended? Well, if we look at the 4, 6, 1, 8 extension, which is pretty much high end of where a lot of the high time frame impulses get to with Bitcoin, it exceeded that. And when I'm saying the 4, 6, 1, 8, it's off of 1, 2, okay, 1, 2, 4, 6, 1, 8 target would have taken it to 2718. It went to 41,000. Okay, 41,000. Now, let's kind of take a look at the way I am interpreting the count of what's going on in our what I'm calling our larger fifth impulse of this cycle. Where did what I'm calling the third hit? Well, the third, no surprise, it hit 4, 6, 1, 8, right? 1 to 2, 4, 6, 1, 8 extension. So we can see it overshot big time in 2021, and then you got a retrace, and then that 3 to 4 hit the 2 extension on the top end to form sub 5 of primary 3. Okay, And so what I'm claiming is going on here is, and you see this a lot in commodities. You see this a lot in commodities. Go check out silver in the 2000s, oil. You see extended fifth waves. They're very, very common in commodities. And so what I'm thinking is happening here is we've got our one WXY2 made a 1, 2, 3, 4, 5 to form 3 WXY4. And now we're in the process of a 1, 2, 3, 4, 5-wave move to exceed the 4618 extension. And I've got this somewhere north of 240 to 265 in that region. Is a median target, somewhere above 200,000. And that's a raised target from, I had been claiming kind of my median target was 165, but the reason I've extended it for a lot of different reasons. One of them being the character within the impulses within what I'm calling the current cycle being very revealing, as well as sentiment. I see a lot of target lowering. I see a lot of, 150, 100, 111, 120 calls, and that's the opposite of what you saw here, right? We had an extended third wave back here, and that caused people, including myself, to raise targets to 200, 300, 400. We heard everything, right? And why is that? It's because this extended third pulled forward expectations. And what was the reality? You had a subdued fifth of 3, okay? You had a subdued fifth of 3. And so the opposite I'm expecting to happen here, where this wasn't extended, was a normal looking type 3, 4. And so that's what's informing my thought process there. Okay, what's next? Low time frame. Low time frame speculation. Let's take a look. So this is just a detailed look at the count that I just shared, okay? And let's just take a look at what's going on. So what I'm calling this first impulse coming out of the deviation reclaim into 2, we've got a 1, 2, 3, 4, 5-wave move, which I am claiming here is forming sub 1. And now we're, for all intents and purposes, consolidating that move, where, if this truly is a first impulse, I'd expect to see a retracement of that, somewhere at the 618, 50% 618, that region off of 2, right? 1, 2. Let's see where this kind of comes down. Let's see. All right. And off of the bottom of 2, what do we have? We've got, so far the 618 has held here. And so where I'm claiming the 2 is in, I wouldn't be surprised if that was, that was the bottom. I mean, technically speaking, you could get, right, this could be your A, we could be forming even a B, and then, C down to even a 382 at 64,224 still would be, that would be a valid structure as well. The difference here is, as we're getting further and further along in the macro wave count, things start moving more parabolically, quicker, shorter in time. And so what all that means is the retracements get shallower and shallower and shallower and shallower, and the extensions go a little bit further and further and further and further. And so for all intents and purposes here, the bottom could be in. That's how I've got it structured, counted. We'll see. And so this is the primary scenario where we're forming this A, B, C, 2's in. We've got this nice little bull flag that we're trying to break out of here. And next stop for me is $84,000 range, $84,000 range. If we zoom out, and again, even if we were to get folks something, right, like I said, where that's A and working on like B and then, you know, C, all that does is kind of delays, right? Just delays this a little bit. So I'm expecting next week to hit in that 84, 85, 86 region. That might just come a week later or a few days later. If that were the case. And again, my bias here is very much we are resuming in the context of an uptrend. Okay, so that's where the bias lies in this. And so let me just zoom out a little bit and kind of show you how I'm thinking about this extended fifth. And so where I'm looking to form here in this next move, I'm looking to form is one. I'm looking for one of five to form. Okay. And so, you know, expect some volatility if this were to play out, right? Where you could get a move into those 80s and then, you know, mid 90s soon to follow, a very sharp, quick type of correction into the 78s, and then somewhere, you know, north of 110, 120, 125, somewhere in that region, could happen really, really quickly. Prior to, and this is maybe not, I'm not giving this credit enough. You know, if this were to play out, then I would get ready for maybe a month, couple weeks, month and a half. Could be longer than that. Could be the summer, a summer lull where we get a correction, you know, even deeper. So just kind of the way I'm looking at it right now, folks, on the low time frame, those are always a coin flip with me. Last but not least is WGMI against Bitcoin. And folks, this is technically speaking, what we needed to see happened in this chart, in my opinion, and it happened last week. Okay, where you've got a set of patterns, right? Relative strength going all the way back to from the summer of last year, mania kind of explosion in the Bitcoin miners, and then the incredible move down, the bleed. Some of these names went, you know, I think Mara went from 21 to like 7. And then you finally got some compression within this pair. We finally got some compression within this pair in the fall, right? Where you can just see the price was bleeding down. The strength was starting to kind of regain itself, even though the pair was going down against Bitcoin. So that's good. That's a divergence, and that's compression. That's a positive divergence. And then we broke that downtrend, and from a momentum perspective, saw a strong move against Bitcoin that started in November. So 2-month move that just saw a massive outperformance against Bitcoin. Same kind of thing has been unfolding since. Okay. And we've got this downtrend in momentum. But you know, we've got we have some compression very similar to what we saw here, right? We've got this compression going on in momentum. This is what threw me for a loop. I had the miners making major moves in much sooner, in April. My thought here was 1, 2, 3, 4, 5. Okay, and that is where I got screwed up. I thought we were making a 1, 2 here and then a move out. It turns out we got a truncated fifth, and my interpretation here is 3, 4, 5 to C was truncated, and you sometimes see that where 5 doesn't extend past 3, and so the correction wasn't over. And so from a technical perspective, what do you want to see? You see a cloud getting larger and larger and larger and looming, right? You see this cloud kind of getting larger, and it's getting wider here even than it was back there. That's major resistance. So the first crack, no go. Second crack, no go. Third crack, we got in. Good. What's momentum doing? Momentum is breaking out. And then on Thursday, we had a retest, and successful retest Thursday to close the week, breaking out. It's exactly what you want to see from a technical perspective. Very similar to the price action that we saw in late November prior to this move. We're seeing the same technical things show up on the Bitcoin miner WAGMI, denominated in Bitcoin chart. So folks, my expectation here is very similar outperformance that we saw in this region in the next couple months in front of us. So folks, I hope you enjoyed that video. Have a great rest of your weekend. Thanks for all your support. And that wraps it up. Take care.